Markets got exactly what they expected, a rate cut of 25 basis points, and markets closed virtually unchanged. Therefore, our base case from the Saturday analysis remains unchanged. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points that support the bullish base case remaining unchanged. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts, starting right here on the SPY Daily. The framework we'll use today to speed it up is, does this threaten the base case? Simple answers, yes or no. We've started a pullback today from the all-time high. Does this threaten the base case? No. Is there a potential higher low? Yes. Does this threaten the base case? No. It supports the base case. You can clearly see that the low of today's wick is well above this previous all-time high level at 652.25. Let's take it on down immediately to the hourly timescale. Is this a firm daily higher low during the pullback? The answer is no, because the trend never actually flipped to down. You have highs, you have equal highs. You have lows, you absolutely have a lower low, but you do not have the missing ingredient, a lower low. So if the hourly trend is neutral, does this threaten the bullish base case? The answer is no. And therefore, as we move forward, I would like to see either bullish consolidation persist here, Brigade bolts into blue sky territories, or if we do drift into an hourly structural downtrend, that is fine. Noting that this is a soft daily higher low, we could find a firm daily higher low. A firm higher low only happens when the hourly trend actually flips to down, and I would still use this same zone. We have 654 and 652.25. If we go back to the daily timescale, another pullback that revisits this area would still be bullish and the trend would still remain in the upward direction. A quick nuance that I'd like to point out on the hourly timescale is that obviously when we did break down underneath this low, and obviously the lows of Friday's session as well, you can see that on the rally back, there was no attempt from the sellers to yield a lower high. Not even some sort of like close here and then a bar that closes underneath. Nope, immediately back up for a 100% retracement. What this would indicate to me is liquidation break. Why is liquidation break important? Because number one, it indicates we do not have stronger sellers participating in the market. And number two, any momentum shorts who are involved shorting, even just looking for a scalp towards the low of day, has likely stopped out of that short scalp. And therefore, if we don't have stronger sellers nor momentum sellers, who's left to participate in the market? Probably buyers. Does this threaten the bullish base case? The answer is no. Let's take a look at the market internals. Is there anything here that threatens the bullish base case? Is there any major change in tone at the exchange level? The answer to me is absolutely not. When we broke down, the volume flows hardly got negative and they closed the day positive. If we look at the advanced decline line, it closes right at the 0 mark. The index score is much more relevant for intraday trading, so I wouldn't read into that negative build. And you can see here that the cumulative build, although red, is not substantial in the downward direction. Nothing here threatens the bullish base case. Let's take a look over at the market profile. Anything here that threatens the bullish base case? In my view, not really. If we were going to see value shift substantially lower, there was so much more opportunity for value to build out underneath halfback as that acceleration was taking place, and it simply didn't. The fact that value is overlapping and sideways here, it's overlapping to down, I suppose, if you use the value area low relative to the value area low of the Tuesday session. However, it's not substantially lower, and prices did attempt to make a substantial move to the downside. It simply did not find value or acceptance on those lows. Once again, this is very indicative of liquidation break in my estimation. The next thing I'll point out here specifically on the market profile chart is that we do have an overnight all-time high. And typically that is not the way the auction should end. It is an unsecure high, and I would expect at some point in either the near future or the distant future, the market to trade through that level. So that by itself would kind of indicate that after a soft higher low, if the market's going to move in the upward direction, we have a clear target. It's the overnight all-time high that was set Monday night headed into Tuesday. Let's take a look back on over at the platform, and let's quickly have a look at our good friend, the nasty NASDAQ. What's going on in the Qs? If we take a look at the daily timescale, is there anything here that is a threat to the daily base case, which is that bulls are in control? Absolutely not. We have a pullback from the highest high in the trend count. There's plenty of room for a daily high or low anywhere above the double bottom neckline from way back here. I know it sounds crazy, I know it sounds uncomfortable, but it's the truth of counting trend in this current chart. Now, ideally, I wouldn't want to see prices underneath this level here. It's the 3-day breakout high at 581.25. Let's take a look at the hourly time scale. Anything new to glean from this perspective? Not really. You can see the same equal high that's made after an attempt at a lower low. I would not call this a confident hourly downtrend, and therefore hourly consolidation that persists over 588.35 is bull flag consolidation until proven otherwise. If we take a move over these highs right here, we should target the all-time high and then the overnight all-time high, just like in the S&P 500. So once again, at face value, there is nothing here that threatens the bullish base case. If we go to the daily chart and we do start to see this market drift in the downward direction, that's fine. I'm not saying you can't trade short-term pullbacks. If you're a short and you want to try this short underneath 588.35 into today's low, by all means, try the short from A to B. That is absolutely fine. But the major overarching theme for the market right now as a base case dynamic, I know I'm overusing that term intentionally, is that nothing here has violated and really suggested, oh my goodness, there's a change in tone. Bears are really starting to step up. Right? Let's go on over to the NASDAQ side of the market internals, and we'll just ask the same question. Are there any threats here? I know I sound like I'm beating a dead horse, but there's just not. Volume flows are positive, advanced decline line at the 0 mark. You could see here that the cumulative tick as well. Oops, did we even flip this? I was like, this looks oddly familiar. Here we go. Still at the 0 line on the advanced decliner. You can see the volume flows are basically the same, and the cumulative build, once again, hardly red there into the close. No major change in tone at the exchange level. Taking a look at the NASDAQ market profile, if we look over here, value is a little bit more clean to the downside as opposed to overlapping like the ES. I don't think that's the biggest deal. What I would say is that we do have a poor high in need of repair, and I would still carry forward the overnight all-time high here. There's great excess and K period lows. Once again, it looks more like a liquidation break rather than new money sellers getting active in this market. If we take a look over at the small caps, let's quickly round up through this. Let's just give this a reset to the daily. There we go. This one's a little bit more concerning, and the answers as to why should be obvious. Daily structure, much more concerning with that large upper wick. You can see that we actually broke out over this high. We made a new high relative to some old levels from off to the left, and then where did we close? All the way back down inside of this range after failing to sustain that bullish momentum. Now, it's not the end of the world because this is technically a higher high intraday from here to here. There's still an opportunity for lows, higher lows, higher lows, higher lows, so on and so forth. There's still some higher low opportunity here, but the candle structure alone might be a small threat to the bullish base case here, and that is worth noting on small caps. If we take a look at the hourly time scale, once again, you can see how this was an hourly uptrend. You have lows, higher lows. See this little pullback here before the acceleration? That was a higher low. From here to here, you sort of have equal highs. From here to here, you have a higher high. Undoubtedly, no matter which high you count from, that is a higher high. So we have an hourly uptrend on our hands, and it's a matter of do we hold on to 238.50? If we do, markets consolidate here. Fine, looking for constructive continuation in the upward direction. If we fail this, suddenly the hourly trend does not look as good. This would be the first emergent crack, I would say, in the base case for the market as a whole, noting that small caps are ultra sensitive to that monetary policy and the Fed decision from today. Okay, so that is one of the takes here. Watch small caps. If they start to fail this breakout, it could start to emerge as a red flag. Let's jump on over to our Russell internals and quickly have a look over here. Volume inflows are fine. Advanced decline line at 0. Very, very small bearish build on the cumulative. Nothing to write home about. Once again, does this threaten the base case? I would say the answer is no at the index level from the internals on the Russell. Let's go on over to the market profile for the Russell. Let's give this a little refresh like that. There we go. Value actually progresses in the upward direction. Here's value from Tuesday. Here's value today. Now, it would have been ideal, right, if value was able to progress up here. If we got high and tight consolidation for something like this, it obviously didn't happen, but it's still progress in the upward direction. It's far superior than seeing value actually shift in the downward direction. So, at a very fundamental level, does this threaten the bullish base case, value shifting higher? No, it doesn't. I would say if we take out these lows, that's a different story. Now we have trapped overhead supply. So these lows will become paramount in the small caps. Let's go back on over to the platform here. Let's take a look through quickly our sector watch. Who was leading, who was losing, and where was the weight? Leading this week is energy, followed by communications, semiconductors, and then financials. At the bottom end of the barrel, it's utilities, materials, real estate. Okay, so those are your three. Let's go 4 on the downside as well. That's going to be healthcare. I wouldn't really call this an overwhelming posture in one direction or another. It looks kind of balanced and neutral more so than anything else. Let's take a look at the structural charts. Does this threaten the bullish base case? Energy? No. Upside pressure is upside pressure if it gets into the gap. If we look at communications, a little bit of I was going to say inside candle. It's not technically an inside candle. There is a higher high there, but it's a 3-day balance range on the highs with a hammer low right off of the previous level here. So is this a threat? Once again, the answer is no. Let's take a look at semiconductors. Most importantly here, we want to look at this lower wick, how it sweeps these 3 equal lows. That actually repairs what I would consider the improper end of the auction and now secures a much better low here. So if this is going to sustain, any continued acceptance over 303 would just be bullish for semiconductors. Let's take a look at financials. This is a little bit of a concern for the base case, right? Noting that we broke out blue sky territories and promptly closed right back at the high. If this can't get continuation tomorrow, I would note this as a small white flag. Not enough to really destroy the market in the bullish base case, but the question would just become, why are financials not accelerating into blue sky territories after a multi-week balance range? The pressure is built up in this box. As we break through the top end, we should get that release, right? So if we don't get that, carry that forward as a small threat. If we look at the XLK, we actually mentioned this in the squawk room today as FOMC was taking place. It looked into this gap. It was very, very nuanced. You had to be Johnny on the spot with this one if you were watching it. Looked into the gap and promptly accepted right back out of the gap. That was a big tell that this was not going to be a bearish day. If we saw the market move into this gap and close weak on the gap fill, that would have been much more concerning, noting that the day there would have looked something like this, right? Now, of course, there's still an opportunity for a daily higher low over the daily 20, but it would have been far more compelling for a potential lower high threat as we moved into the future. None of this is even a talking point, noting what happened into the close for today's session. There was no acceleration through the gap where there's virtually no structure. So in my view, this supports the bullish base case. It doesn't take away from it. Let's take a look at utilities. Looks fine, nothing to talk about there. Materials, midpoint of the range, looks fine, nothing to say. Real estate, similar conversation here. Healthcare, does this take away from the bullish base case? It's no longer the second heaviest weight sector, so I'm not overly concerned. It's actually defensive. So defensive and now lighter weight, no issues in the middle of that range. Let's go industrials. Nothing to really talk about in the middle of this range. Doesn't help or hurt the base case. If we look at the XLY discretionary, perfect gap fill reversal over this previous high, closing back inside of the multi-day range here, does not look like a threat to the bullish base case. Even if this pulls back, we know a daily higher low is available at the daily 20 SMA. Let's go XLP. A little bit of a recovery back over the 80 handle. We know that this is the bottom end of the balance range here. If we go look below and fail, it is a D for defensive sector, so we don't want it pushing new all-time highs to lead the S&P, but if it does produce upside pressure back into the range to rotate towards the top end, upward pressure is upward pressure. So that is looking bullish here for the XLP so long as we can stay over 80 at this point. I will say the daily structure does not look all that compelling. A little bit of that upper wick threat there. Daily 200 in green, daily 20 in orange, confluence at the high of day. Let's quickly look at the TLT. It gapped up this morning, certainly faded a little bit during the press conference. No big deal. I think that rates bottoming out, at least in the 10-year, around 4% makes logical sense there, basically. And for the most part, the rate cut being priced in is what drove the move. And now that the news is out, there's really nothing left to produce on the bond side of things. So no issues here on the TLT. Let's quickly tear through the ratios. And again, let's keep it simple here. Does anything threaten the bullish base case? I would say we would like to see some improvement out of the XLF. I would say if we pair this with the failed breakout in the XLF, where is it? I'm trying to point to it. There it is. The XLF structural chart, that could be a little bit of a red flag, but notice that we're batting 3 for 3. Check, check, check. This is not a threat. This is not a threat. This is not a threat. Let's go take a look at the A set, right? Checking six of the 6 bullish boxes, all set. No issues here. Risk appetite apparently remains strong. If we look at the B set, gold, subtle little downtick today on the gold ratio, but anything dramatic? No. I would say this is, again, a small, tiny little white flag relative to all the other bullish data points that we've covered thus far. If you look at the TLT ratio, no flight to safety happening there. If you look at Bitcoin breaking back out over the neckline, let's go to the daily chart here. Let's go full screen on this thing. And I just want to illustrate that this, as long as we hold over 113,850, over this high, probably sets up a swing trade for me into this high. Okay, so I'll be watching this very closely on Bitcoin. The longer we could stay above 113,850, the better this looks. You could also make a look or a chart, a watch, a swing, whatever you want to call it, over on Ethereum, right? If we're over in Ethereum, about 4,500 right here, chart looks pretty darn good. Back-to-back hammers, lower wicks, buyers stepping up. If we take out these highs with momentum, probably targeting the equal high stop under the low. right? So looks good there, and that would be bullish for risk appetite in general. If we take a look at the dollar and rates, we know that rates have stalled out around 4%. No issue there on the 10-year. That makes sense considering the pricing in during the drawdown here. The dollar getting a little bit of lift is probably good. That way we can sort of avoid maybe an overly inflationary environment. We'll talk more about the Fed here in just a second. Here's the inverted ZT flattening out. I think the market is now just pricing in those 3 cuts into the end of the year here. So we just got one today. We're looking for one in focus. One in September. We just got that today. We're going to skip the meeting in November, so therefore October is the meeting. Why are we bothering talking about this like this? Let's go over to the platform here. Let's take a look at the Fed Watch tool. You can see that there is no November meeting. Why bother thinking about it when you can just look at the actual data? So today's rate cut confirmed. That was 1, here's 2, and here's 3 into the end of the year. I think the market's coming to grasp with that a little bit more firmly. Instead of the 6 rate cuts, it was sort of like hell-bent on way earlier in the year. If we take a look at the SEP, a little bit concerned here that inflation risks were not dramatically revised to broadly balanced. We remember from last time, they were also weighted to the upside. So if the Fed is going to be lowering rates, then it's really in service to this side of the dual mandate. Jerome Powell acknowledged that, of course, but I would have liked to see the threat, or at least the perceived threat, of inflation move lower. Jerome Powell absolutely talked about sort of the tariff inflation being a one-time shock to goods. So why are we not going over here then on PCE inflation? So I'm a little bit hesitant about that. If we take a look at the statement tracker here, there was one dissent, of course, or not really a dissent, but Stephen, the new appointee to the Fed board, of course, preferred to lower target rate by 1.5. I misread this on the initial release, thinking by 1 full percentage point. I was like, oh my God, this guy's off his rocker. It's 1.5. Okay, so 1.5, the strike through makes that a little funky. 1.5, a jumbo cut, basically the full 50 basis points. Okay, so that is your strike through commentary. I think that generally it was another Fed meeting where we got another round of, hey, we'll be data dependent. The labor market's starting to get a little shaky. We're going to give it a little cut. We're not overly concerned. Inflation's still, it's on its way towards 2%, but it's not fully there yet. We get it. So I would not read into this meeting all that much. Once again, I think the price action is king here. If we just go back over to the S&P 500 quickly, all I would say is just like, okay, if the market learned something new during the Fed meeting that dramatically changes the opinions of participants, then why did we not see price close down here on the lows? All right, getting back into the supporting evidence and quickly rounding up through the remainder of the analysis here. Bond market seems to be on track with what the Fed said today. We're worried more about the labor side of things instead of inflation. Fine, bond market seems to agree so far. If we take a look at credit spreads, these are moving in the right direction. This does not hurt the bullish base case. If we move into junk bonds, they're sitting on their highs. They did not pull back aggressively. There's no bearish divergence. This does not hurt the bullish base case. We looked at crypto already. Here's breadth. There's breadth, little uptick on the 50 SMA, flat on the 200, little uptick on new highs versus lows. If we take a look over at the RSP, I found it pretty compelling that as the initial response to the FOMC came out, we actually did crack a new high. We ended up closing fairly neutral. I wouldn't be aggressively bearish based on a breadth divergence, although it would have been better to see this close green up here towards those highs. I think you could equate this a little bit more similarly to the IWM, right? Let's jump into the QQQE though, because as you can see over here, we actually did close outside of this breakout point. So in the NASDAQ equal weight, I would say that this reaffirms the bullish base case and not that breadth is overly restrictive or contracting even for that matter. If we take a look at the volatility indications, rollover after the acceleration and the anticipation to be expected on VIX as well as VVIX happening here. And the most notable one, of course, is just taking a look at your one-day VIX. We do have a VIXpiration, so ignore the white line up there on the vol futures, but we're still in a nice strong contango across the board. Same thing here, 9 versus 30-day. And if you look at this, look at the upper wick. That is just all the hedges unwinding as the FOMC actually takes place. So nothing here is overly aggressive in terms of opposition to the bullish base case. I hope this quick style analysis and the yes or no answering style interrogation maybe helps think through this. Like, there's no reason to change your stance if there's no supporting evidence. You don't just start shorting the market because you feel like it and we're at the highs, right? So let's quickly go through the core list of companies, and then I've got those 4 ideas for you, and then we'll be on our way here. You could see that NVIDIA, of course, gapped down on the China news this morning. I would say if this can hold over 170, it's actually the correct spot for a potential higher low on the daily time scale. If this is inverted head and shoulders, you want to stay over this neckline. It's where we got a little bit volatile on FOMC, but for the most part, we closed right on 170. If we could stay over 170, I would start targeting this gap close overhead. If this fails under 170, I would just let it go and wait patiently for the next bearish setup to actually unfold. I don't look at this chart on the daily and say, okay, it's going to be an easy short into these lows. That's not really how this chart is presenting right now. Let's take a look at Microsoft. What do we see over here? Beautiful daily lower high underneath 518.50. And as of right now, you can actually see in the hourly chart a counter trend rally here. If this rejects for a lower high here at 512, I would love a rejection of the daily 50 to roll over and target the equal lows through the equal lows into 503. Thin structure through just what is a simple lower wick on that Friday session of what was last week. That is Microsoft rally rejections of 512, set the lower high for continuation. If we look at Apple, I love Apple's consolidation. Let's go to the daily chart here. Beautiful V-shaped recovery, digesting near these highs. If we can get consolidation to persist over 238.15, breaks for Brigade bolts over 240 look pretty solid into 245.50, and then beyond that we have 247.25. Here it is on the daily time scale. This is where that level is coming from. Previous support acting as resistance. That's the major target. If we take a look at Amazon, Amazon's a tough one. I really am not fond of this chart in here. Their structure is all over the place. You have highs, lower highs, higher highs, lows, higher lows, trying higher lows, but this is a lower high after failing the breakout through the weekly high. So I'm a little bit cautious of Amazon's chart. This is not a top priority for me tomorrow. If it sets something up pre-market, then so be it. If you're like, hey, Matt, it's a head and shoulders, great. If you want to take that short, be my guest. I don't like being short into the 50. I don't like being short into this previous level. I'm going to pass on it. Let's take a look at Google. Google looks fantastic. Look at the daily chart. Clean higher low, hammer candle near the highs. If we break through the equal highs now up here at 252.15, looking for follow through in the upward direction. Blue sky territories above. If it does break down into this gap, I would possibly look for gap fill reversal to play it long for a daily higher low. That's what we have on Goog. Let's go to Meta. Meta is starting to set up a little something nice. I would think that this is the major pattern that's trying to resolve. There's your inverted head and shoulders. It's a little sloppy on the daily chart, and we've had to remain patient through this zone in here, trying to navigate that daily 20, but notice how this is now a multi-day consolidation. If we can break and Brigade bolt out of that, the all-time high is the target on the resolution of the inverted head and shoulders. Let's take a look at Tesla. Tesla with the multiple little consolidation bars here after the big rally in the upward direction. Chart looks great. I honestly would have liked if this didn't break into the close, but we're dealing with the chart in front of us. If we open on a subtle gap up here over 423.75, higher low holds of that should set up the rotation into 438.75. If we drop back down underneath, I will just remain cautious. If we go for the gap close, I would start to get reinterested in longs off of 396.70. Let's take a look at JP Morgan. Bulls on parade here. Really no issues. Here it is on the daily. Just one time framing firmly in the upward direction. Palantir, what do we see over here? Beautiful daily candle, huge hammer, massive lower wick right off the top end of the prior range, moving average cluster, and actually closing back inside of this range here. On the hourly chart, you could see that coming into today's session, it actually was going to be a decent watch to say, okay, can we get this Brigade bolt? Hopes and dreams kind of went out the window as we broke down early in the session, but for now, closing back inside of this range keeps the same setup alive. If we consolidate and Brigade bolt over 171.25, looking to walk up the upside targets, 175.35, 177.60, and 183.50. Going back to dailies and moving along to Broadcom, a little bit of a breakdown from this higher consolidation range into the lower consolidation range. Still hard pressed to be a bear here. However, rally rejections of that level, 356.25, would make sense. If we take it on down to the hourly chart now, you can see here consolidation, Brigade bolt, there's your counter trend. Rejections here for a lower high, possibly set something like this up. I think for me, the better short, though, is just like, let it do whatever it wants to do in here. If it's going to close the gap, that's where it becomes a little bit more compelling. So I'll be watching for that personally on Broadcom. Let's move along to AMD. And, just because I'm watching for it doesn't mean that it's a top priority forecast. It's just like, if that happens, that's the setup I want to take, just to be clear. If we look at AMD, I think it's starting a little bit of this inverted head and shoulders, trying to build out that daily higher low here. If we take a look at the hourly chart, we know that we've been tracking this for a while. Here's a micro inverted head and shoulders, and here's one that makes up the right shoulder as well. So if we can stay inside of this balance range here, I think the setup is brewing. It's like half baked as a setup. If we get over 163.65, that's where I want to trade through the thin structure, recapturing the daily 50 into 169.50. If we're just chopping around in here, yeah, there's probably a trade that looks like this, Brigade bolt into those highs. It's probably long from the white line level there into the actual level here we'll label A. It's probably a trade, but is it the primary idea? Not really. It's over 163.65. If we break back down underneath 158.25, makes that trade a little bit more difficult to want to continue watching for, and instead starts to look like a lower high through the equal lows. This is a flush point. I would say that the danger is this, to start threatening the gap close, 150.50, 147.60. Let's go on over to Robinhood. Vlad pulls through here, and the bulls are back on parade. You can see we're back over this pivot high. I wanted to start zoomed out so you could see that 117.75. If you take a look now at the hourly chart, this is negating this as a man ray or a head and shoulders, whatever you want to call it. You're over that right shoulder. So over 117.75, bulls remain in control. Target is 120.85, then the all-time high. Beyond that, blue sky territories speak for themselves. If the sellers are going to make something happen, it's got to be under 114. Look at this example here. Sellers could not get the job done on the Monday session. Okay, so I would think that the buyers have an edge because of that. You can see that on FOMC, we didn't even really test that level, and instead we closed a little bit more firmly. So that's Robinhood. Now I've got 4 trade ideas for you. The first one's on MU. Micron has been on a tear recently, breaking out of this massive base from over here, flag, whatever you want to call it. You can see that we have a bullish engulfer on today's session. We look under the previous day's low, close over the previous day's high. If we take a look at the hourly chart, if we break out of this range, we have nothing but blue sky territories above. The fact that the sellers could not find any acceptance under 156.50 leads me to believe that this could be a primary idea. Over 160.35, blue sky breakout. Let's move along to OKLO. OKLO has been a great trader recently. If you take a look at the daily chart, multiple back-to-back hammers inside the upper 50% of the breakout day from Monday. If we take a look at the hourly chart, you can see this as a bull flag, of course, and very simply put, over 95.93, call it 96, you're looking at a blue sky breakout here. Very simple chart to watch. If you're under 91, I would let it go. You could try the thin structure retracement short A to B, but it would not be my first choice. Let's move along from OKLO into Snowflake. Snowflake is a little bit of a look below and fail setup as well. Notice the really heavy close on Tuesday. We look under that low during today's FOMC volatility and then close back inside of that range. If we go on over to the hourly chart here, you could start to see this. Let's zoom in so we can see it like this. Possibly a little double bottom, little neckline action. If we're over that, you can get a scalp intraday for risk reward that looks like this to start the trade, and then really the big rotation is up to 231. That would be really supporting off of the daily 20, mild pullback after the earnings gap up, and probably breaking a trend line as well. If you strike a trend line that looks like this, if you're over all that, your major target is this last lower high at 231. That's Snowflake. I would not be interested if this breaks and then fizzles out, and I just wouldn't be interested at all if we just open and stay underneath 218.70. Snow, done. Last one's Fortinet. FTNT is the ticker here. Not the greatest setup considering the relative weakness on the major gap down. However, the gap is kind of what makes this interesting. Notice how we're just grinding along over the daily 20. If we can get something that looks like this, that's probably where you start to get a little bit more lift into the gap. I'm not saying it closes the gap all in one fell swoop, but you could look for some upside with ease of movement because there's no overhead supply there. That's what I've got for you in today's episode of the Midweek Market Update. Hopefully a little bit shorter than what you're used to. A lot of talking today, morning prep, FOMC, the full commentary, this commentary here. It's a lot going on. So if you'd like to come hang out with us as we're talking, as I continue to use my voice box nonstop all day, check out the live squawk listed down below in the description of today's video. If not, we'll be live as we always are on every morning here on YouTube, every morning, 8 o'clock Eastern time for another episode of the Pre-Market Prep. Hope to see you there. We'll do it all over again tomorrow. We'll do it into the end of the week. We'll do it for the foreseeable future. Hope you have a green rest of the trading week. Big shout out to the usual suspects. You guys know who you are. And with that, I will see you in the next one.